Hey, good morning, everybody, and welcome to What's Hot on the Open here. Taking a look at all of the U.S. market action on MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Well, we've had some key economic reports. The producer price index came out this morning, up about 0.3%. Now, expectations were around an increase of around 0.2%, and last month we saw a 0.6% increase. So we're seeing that the cost for producers is increasing. Now, that's in general a positive. Could mean that there's some brisk activity economically. Things are moving. What it also means is that there is a price risk for consumers. At some point, producers are going to pass along those price increases as far as the production of those goods, and that's going to come to the consumer. And that is what the market might be looking at early this morning. Plus, we have the FOMC meeting, the Fed, where there is a 93% probability that they're going to raise rates at least a quarter point. So it's going to get it to 75 basis points. And there's even some discussion of moving it 50 basis points, which would give it right at that 1% level, which would be the biggest move we've had in close to 8 years. Now, taking a look at the markets, the biggest thing that you want to take a look at right now is the VIX. The VIX is up about 8% at 1230. That's a 1-point move right now in the VIX, trading right off of its best levels at 1230. We're going to watch this one very closely. This morning, it's trading at levels that we haven't seen it trade at in almost 2 weeks. It's been challenging. It challenged once that 12 level. But it had finished the day, but then just completely tumbled down. This is the area that I said you want to watch very closely. A break of the $12 level and a challenge of the $13.5 level is going to put the short-term bulls on notice. Specifically, take a look at the Dow Jones. Currently, right now, the Dow Jones is trading down 73 points at 20,808. We're right at the 20-day moving average. The 20-day moving average comes in at 20,750. So we're going to watch this. We're 50 points away from that 20-day moving average. A break there puts short-term bulls on notice. We're going to watch that battle between basically 20,750 and 20,350. This area right here is where the bulls are going to have to really hold their ground. This is also going to be an opportunity for those of you that have been on the sidelines. You're going to be able to add to some potential positions if it does hold in here to your Dow positions, or for those of you that have been sitting in cash, this is an area where we're going to watch very closely. Strategies like maybe selling out of the money puts, doing some ratio spreads, some interesting activities and strategies that you could deploy while not putting all your risk capital into play, but preparing for it at better prices. Join us at Strategy Now. We'll talk more about that today. Taking a look at the S&P 500, trading at 2360.5, down 13. Now, the S&Ps have already challenged their 20-day moving average at 2357.40. We're going to watch their 2356. I apologize. It's right now challenging its 50-day moving average. Or 20-day moving average. A break today of that 20-day moving average would be the first break or challenge that we've seen since February, and that's when we had that big consolidation. So you have a lot of people that have gotten in the last couple of weeks. We're going to watch this area very closely to see if there's starting to be some short-term profit taking, especially with the Fed coming out with their announcement tomorrow. We're going to see some trimming of positions. NASDAQ, taking a look at the tech index, trading at 5363.30, down 31. We've seen some overall weakness in some names, in some notable sectors. Semiconductors, which were the strongest of the group, have weakened a little bit. We're also seeing some large cap names, Facebook, Google, as well as the newest kid on the block, Snap, all under pressure. But there is something notable that I want to bring up. U.S. digital ad spending is expected to grow to $83 billion by the end of 2017. That's pretty significant. So names like Facebook, Google, Snap, if they can actually figure out how to monetize advertising on their now new publicly traded platform. This could be an interesting area where if you start to see those plans on these newer names like Snap, there might be some entry levels, especially now that the stock has started to pull back after its IPO. As far as Google and Facebook, this is going to be where you're going to start to look at critical levels. Like, for example, Facebook, we're going to watch that 136 level, between 136 and 132. This is going to be a level that you could start looking to potentially build some positions if you're not already potentially in here. That's the area that you want to see held. And knowing that this digital marketing ad spend could increase to levels that historically we have not seen before in 2017, that would be a benefit potentially for names like Facebook as well as Google, which are both down today, but ever so slightly. And you can see that Google is holding up at its best level so far this session, just slightly off of its open, but only down $2.42 at 862. So we're going to watch those names very closely. Taking a look at the Russell 2000. Now, everybody has listened to what I've said. Russell 2000 is that canary in the coal mine. Once it broke its 20 and 50-day moving averages, challenged its 50-day, and could not get through today, this is telling me that overall there is some uncertainty as far as domestically speaking. Now, with that being said, we are going to continue to watch this data as well as the policy statements. One notable policy statement that could be coming out from the White House is tomorrow. The president is meeting with the automakers, and with those automakers, they could be discussing emission standards and the fact that they are very stringent. The biofuel industry has been pounding the Congress and the Senate on not removing those or reducing the emission standards. We'll watch that one very closely. So watch the automakers today and tomorrow. Wait to see what the president has to say after he meets with the large automakers. But we're seeing that with the CPI, the PPI is up, the producer price index is up, and we're waiting for the FOMC. Small caps have pulled off and pretty dramatically, trading on its lowest levels today at 1354.36, down 15 on the Russell 2000. Watch this one closely, and full disclosure, I do have a position on for my clients in the Russell 2000. Taking a look at the dollar index, this is where the pressure has come in both in the currency markets globally as well as in the commodity markets. The dollar index is holding up, trading at its best levels so far this week, right off of its highs of 101.50, up 17 cents, holding up today above its 20 and 50-day moving average. Watch that 101 level. You can see that this pressure from the dollar strength, as well as the glut of crude that we have on the market, the West Texas contract is trading at its worst levels all week. Right off of the lows of the open, trading at 47.53.88. It is blown through what I figure is a critical pivot point, 47.70. Now we could start seeing challenges of 47 and 46.50 on the crude contract. Again, we're going to continue to watch the EIA and API storage reports. That could be a very interesting area where we could start to see that if we actually scale back, we're going to see where next support comes in is right at that $46 level, where next viable support, and that was in November, October of last year. So we'll watch that very closely. Finally, taking a look at the fixed income markets, we're seeing the bond markets. They have bounced up. You've seen that prices are starting to pop up in the bonds. The 10-year bond is trading at 97 even. That means yields are dropping. That's going to put pressure on financials today, folks. Taking a look at the longer end of the curve, you see that the 30-year is trading at 96.21, basically trading off of its best levels as far as price. We're going to see the yields drop on both the 10 and 30-year. That's going to put potential pressure on the financials, especially if this continues. But they are coming off some pretty severely depressed areas. As a matter of fact, yesterday they closed on their lows so far in the March trading session. So we'll watch to see if bonds start to pick up a little bit of steam in front of the Fed announcement today. We'll watch that price action very closely. All right, folks, that's it for what's hot on the open here at U.S. We're going to be talking about some really cool strategies that, in Strategy Now at 1:30 Eastern Time that you could look to implement, especially if you're seeing that there's a potential pullback and you want to add to or build a long core portfolio. We'll see you here at MarketStream.live at 1:30 p.m. Eastern Time.